Hello, ladies and gentlemen. Welcome again to the Blockchain Wealth TV channel. We're going to talk about another exciting project that just got onto my radar, folks. If you love decentralized opportunities, if you love DeFi, you love staking, you love crypto, I believe this is for you. Once again, quick disclaimer, nothing I'm going to say here is considered financial advice. I am not a financial advisor. This video is for learning and educational purposes only. My job here is to educate you on the opportunity today called WebKey. We're going to look into that. But before we do, we want to talk about the Anubi Foundation, right? What is the Anubi Foundation? As you can see on their website, this is for everyone focused on investing in the Web3 ecosystem with a special emphasis on advancing the DePIN track. DePIN means decentralized physical infrastructure networks, right? So let's go on Google first, right? We go on Google and we go look up the Anubi Foundation. This is what we see. The Anubi Foundation is a Web3 venture capitalist firm and technology entity focused on promoting the innovation in DePIN, okay? Which is very, very good. So they started their foundation with about 100 million in the first phase fund. Wow. Then they created the WebKey smartphone designed for Web3 AI and enhanced data privacy. So this is very interesting. You have a crypto project that is backed by a foundation that has a lot of liquidity, a lot of networks connected to build actual physical products for Web3. They also have their token. We'll talk about the WebKey DAO token and the WebKey DAO 2.0 token, as well as your staking protocol, right? So going back to their page, let's look real quick at what the foundation does. They already been in the industry for about 3 years now. They have over 100 plus projects to their belt. Some of the projects that you know already, right? So you can look at, they have supported Gala. They have been a part of Origin. If you don't know what Origin LGNS is, it's a project also built, I think it was built on the Polygon blockchain. And currently they do about $40 million a day in trading volume, been around for over 2.5 years. So they build long-term crypto projects and crypto infrastructure. Okay. Okay, so other project they have is Mellow Studios under their belt. Now you can see their portfolio, wide range of projects, people, wide range of projects, including Axie Infinity, Chills, Dune Analytics, Cellar, right? These are projects they've either been venture capitalists for or been part of the supportive team, right? As you can see, it's a whole list of great projects. So we're going to come quickly and talk about WebKey, right? So as you can see on the dashboard, you can see the total supply, currently around $6 per token, somewhere around $5.80. Between that, it's been moving around. The risk-free value of the treasury assets is sitting at $7 million today. The total value of the circulating supply would be over 600 million. That's the market value, folks. Massive project, very massive project. Runway available, been around for about 444 days. That's huge. Go look at their homepage, right? They have an index token as well. So it's very exciting what these guys are doing, right? They've built an entire decentralized ecosystem built around Web3, including technology, micropayments, digital IDs, decentralization, blockchain technology, AI, metaverse, just name it, all in one, all in one. Okay, so we're going to talk about the winning strategy. Now, we know currently about the Anubi Foundation. We've seen what WebKey is about. Now, let's look at their staking protocol. And we're going to talk about the winning strategy. Now, in crypto, most people make money when the price goes up. We know about this, right? You buy low, you sell high. That has been the general consensus. But there's another side of crypto, right? Where insiders have figured out a way how to compound their crypto continuously. And it didn't matter if the price went up, the price went down, or the price went sideways, they still got paid regardless, right? So this is big. It's a game changer when you move your mindset from price watching and we look at asset accumulation over price appreciation. And at the same time, in Web3, we are still using Web2 phones to interact in Web3. So today we are looking at the future where not only do we escape the price appreciation model and go into asset accumulation through WebKey DAO staking, we also leave the Web2 phone adoption and we go into the Web3 phone adoption where there's on-chain device wallets, local private keys, right? No middleman, no shortcuts, real technology built for crypto. Right? Once again, quick disclaimer before we get into this, they want you to know the earnings are just income examples, right? Understand the volatility that comes with crypto. Also understand that being a part of the DAO, you can and you will earn through participation in compensation or affiliate incentive program. Personally, myself, I did purchase the DAO tokens to join the DAO. And because I'm excited about this project and what you're building, I hope you are excited too. Okay, so we know that we can do this comparison between price versus compounding frequency, right? Now, when we talked about asset accumulation, I'll give you a clear example. Now, most people in Bitcoin and Ethereum are focused on the price movement, right? Then you have the other side where while people were buying Bitcoin, there was a group of people who focused on buying Bitcoin mining units, right? Years ago. And they were mining one Bitcoin a day, one Bitcoin a week. They were accumulating the asset. Then you have the folks on Ethereum, right, who put about 600 Ethereum to being validators. And we know validators are making hundreds of millions combined per year in Ethereum, if not, multi millions. So at the end of the day, you have two different sides. You have the side that has bought the tokens and you're excited about the price going up so they can take profit. And then you have the other side where they are either validators through proof of stake or they have the mining nodes and they just continue to accumulate the crypto, the asset through mining or staking, right? Now in WebKey DAO, all of this goes on a higher frequency, right? You have the ability to compound your staking asset at a rate of 13 times a day, right? So now let's look at the comparison. If an individual bought Bitcoin, right, and over the year, Bitcoin performed and did 45%, right? And Ethereum over the year did well, right? $1,000, you'd grow it, you get 450 on that Bitcoin, you get 300 on that Ethereum. Now, with the same 1,000, if you're compounding 13 times a day at a rate of 0.0528, which is what you'll be able to do inside of WebKey DAO, you would notice that your APY based on the price staying the same, right, would be about 1,100%, leaving you with about $12,000 worth of tokens. Now, even if the price dumps by 50%, you would still have the same number of tokens, but they will be worth about $6,000. So asset accumulation, accumulating more tokens always beats price appreciation is what we are saying here today. Now let's talk about security. Let's talk about transparency. And you can go straight to look at the audit. They have gone ahead to get an audit done by Certic. Many of you know Certic is one of the big players when it comes to auditing. Not only that, they have their entire treasury. So they have 30% set aside for the treasury. They also have buy and sell taxes where they generate tons of liquidity from the transaction fees, right? And all of this goes to the treasury. The treasury is controlled by the DAO, and they have done an audit to let you know that it's not a honeypot where, some people have their hands in, but it belongs to the community as well. Now, when you look at the Olympus DAO model, right, which is basically the same model that the Origins project was built on, as well as the WebKey DAO. And all of these projects are projects that are you can add to the portfolio of the Anubi Foundation. So Olympus DAO had a 10% reserve. Origin had a 10% reserve, but WebKey DAO has a 30% reserve, right? So that gets very, very exciting. Now, we're going to go into the staking side to see how the process involved to stake. And then we'll come in to look at a very, very unique model where you can build generational type of income over time. Of course, nothing happens overnight, but over time, with compounding, you can really accumulate a ton of tokens. So now when you come onto your page, before you go ahead and stake, the first thing you're going to do is you're going to buy their token. As you can see, they have the W key. That's not what you'd buy to be a part of the DAO. This is the index token. You scroll down along, and then you'd go ahead and purchase the WKey DAO token. Okay, the WKey DAO token. Now you can purchase using USDT on the Binance Smart Chain. This project is running on the Binance Smart Chain. So here will be an example. You want to purchase $10 worth of the token. You just click that, hit on swap, then you confirm. And just like that, transaction completed. You have now purchased $10 worth of the DAO token available on PancakeSwap. You can go ahead and look at the chart on Dex Screener as well. Okay, folks? So very lively market. You can see transactions going in and out, right? About 600,000, 671,000 in buys, 643,000 in sells, about $1.3 million in trading volume today, folks, and it continues to move. Price action and price appreciation comes a lot inside of this project because of a lot of the transactions going on, right? So after buying the token, the next thing you want to do is stake the token. So currently you can see there's over 590 million in total value deposited, right? With an APY currently of 1,207% and their index price at 28.44, okay? Now in this wallet, I did do a little bit of staking just so you can see, right? Take you through the process. So once you've purchased a token, you'd put in the amount of tokens you want to stake. You hit stake. Once you hit stake, it would then go into staking and add to your staked balance, as you can see. And within about 2 epochs, which is about 4 hours, you would come and then you'd have to click on exercise to exercise those tokens to get into staking. Now, the interest that you begin to accumulate actually is compounding on top of your capital. Look at this example. I have 33 WDAO tokens staked as principal here in this wallet. It's already earned an interest of 2.3789 tokens, but my total stake balance here you can see is 35.378. So your interest is compounded at a rate of 13 times a day, 0.0528%, 13 times a day on top of your capital. Folks, this is very, very exciting, right? Now let's go ahead and look at this calculator. Once again, this is just an estimate. I believe with the current price around $6.02, $1,000 in this example would be about, let's see, about 167 tokens, right? Or 166 tokens. Now, if you stake for 1 month, right, the staking contracts are not locked. That's a good thing to know. Now, if you're staking for about a month, you would have accumulated 205 tokens, okay? Now, those tokens at today's price would be worth 1,236. So that's almost a $236 dollar gain at the same price, 23%. Now, by month 3, you'd have nearly doubled, right? Doubled your tokens, about 312 tokens, right? That puts you at your value of your tokens now being worth $1,886. Very, very exciting. Now, 6 months down the line, you now have accumulated approximately almost 4 times the tokens, close to that, and your entire value from $1,000 is now sitting at $3,554 worth of tokens. And within a year, folks, as you can see, 166 tokens, which is about $1,000 worth of tokens, today's price within a year. At this compounding rate, you would have already produced over 2,166 tokens. Estimated value should be around $13,000. Folks, this is pretty exciting. Understanding that this is a true DeFi protocol with a DAO with physical products on the market. I am super fired up to know that we have something good here inside of WebKey DAO staking. Now, folks, one thing we forgot to add earlier, if you go down here, you can go to where it says bank card, and then you can get access to their WebKey crypto card, right? Very exciting. Can be swiped directly offline, supports global merchants. Also, they have their payments infrastructure called UPay. Folks, this is very exciting. Now, I'm going to drop a link at the end of this video so you guys can be able to access this protocol and get to use your services, your products as well. If you're interested in the staking, folks, the link will be in the subscription to this video, or you can get with the person that invited you or sent you this video. They would definitely have a link for you as well. Okay. So with all that being said, move on to the next page. Okay, I do have people in my community that always ask me, how can we create wealth in crypto? Folks, this is going to be one of the ways. Now, don't hold me to it. This is just a description from the official marketing material. This is what you want to do, right? Now you can create as many wallets as you want to. This is DeFi. All you're doing is using a Web3 wallet, either a SafePal, Token Pocket, MetaMask, you know it, right? As long as you can access the Binance Smart Chain, you can create, in this example, 4 wallets, one under your sponsor link. Then you take your own link, you create 3 wallets, you call it self A, self B, self C. Now here, your starting capital should be somewhere around $5,000 worth of tokens. We'll call it 5K. Actually, just put 5,000, right? Okay, so with all of this added together, it's about $5,000 worth of tokens. Now, folks, you can get started with as much as you want to. Anything from 200 and above is fine, right? But here, you realize that in about 16 months, now, this wallet where you put $2,000 worth of tokens, with everything staying the same, price staying the same through the compounding effect, you should have already grossed about $50,000 worth of tokens on that wallet. And in the second wallet you have underneath your main wallet, you'd also have another 50,000 worth of tokens. And then here in the third wallet, you notice that it would have grown to about 20,000 worth of tokens. All in all, folks, This is about $120,000 worth of tokens accumulated over a space of 16 months. Now, this is very, very exciting for anyone that is looking for a good, solid DeFi opportunity. This is all passive, right? Now they do have something called ranks. Now, what got me excited is imagine all the Bitcoin or Ethereum that you've had over the years or the Solana. Imagine the protocols paid you not to sell your tokens, right? So now when you have this structure set up with this amount of volume, staked volume, you are literally earning from the DAO about $3,000 worth of tokens per month. Now, this is not a monthly paycheck. This is literally coming in as rebates, right? From the staking that's going on underneath your structure, where you're in about anywhere from 0.3, is 0.3 to about 6% every single day. That is 13 times a day. So all these staking rewards that's coming in every 2 hours, right? You are getting a piece of that every single time it comes in, and that should accumulate to about $3,000 worth of tokens by the end of the month because you have this setup, right? Now, as you give it more time, right, it takes about 3 months to literally double your staked tokens to have accumulated twice the amount of tokens. So within the 16 to 19-month period, you should find yourself already at what they call an A2 with 100,000 tokens on this side, another $100,000 worth of tokens on this side, and $50,000 worth of tokens on this side. Here, you can take it as the DAO is paying you about $10,000 monthly worth of tokens not to sell your WebKey DAO stake. Folks, this gets exciting as you begin to see the numbers going down, right? So this is how you build wealth over time. Good things take time, but folks, if that's all it took for you to earn over $500,000 a year worth of tokens and being paid to keep all your tokens in stake without selling, then I think you need to sign me up for this. I'm super excited, folks. I hope you are as well. So we talked real briefly about how that works. Now we're gonna put in some more information. Uh, if you are sharing your link and other people are beginning to get excited and also stake, just understand you need to at least meet the requirements, right? And having at least $3,000 worth of stake tokens in order to activate 15 levels in depth of people that are able to stake within your community for you to earn. You could call that your nodes, right? Your different staking nodes in your community that are rewarding you. Now here, you would also need to qualify for this by having at least 15 wallets that have used your link to stake. So 15 nodes that are staking under your link, okay? As you can see, you can earn anywhere from 3 to 6% or 0.3 to 0.6% on the daily rebates coming in from the staking rewards. So all of this is very, very important. DePIN is part of the new wave in this next bull run. This next bull run is going to be about utility-based tokens. And what better utility than a project that has a massive community of over 1.1 million wallet holders already, a lot of trading volume coming in, a track record with a foundation that is already proven over the last 3 years, backing projects that are still in existence today, right? You can see a little bit more information about the phone. Now the phone here, it cost about 700 USDT, right? $699 worth of USDT. It's available on all 9 chains, meaning unlike the Solana Seeker phone, which is one of the phones that I have, you would have access to the Ethereum, Binance, Solana, Polygon, Avalanche, Sui, and Ton network right? As well as being accessible for airdrops. Have all the dApps, social, gaming, entertainment, payment services all in one. Now you can actually also earn some sales rewards when other people purchase the phones using your link. So that's very, very exciting. You also get this mystery box as well, where you can receive rewards during events and online events, DAO events, whatever the DAO puts together, or even partnerships with all the different projects that they could be venture capitalists for. And all of these different networks will be airdropped onto your phone. Now, this phone also has its own built-in GPU chip, so you can literally be mining tokens and this phone can pay for itself as well, folks. This is huge, right? This is huge. So with all that being said, they have an extensive roadmap. They have already opened up physical stores in Hong Kong and Korea. So if you're looking to buy this phone and you're in any of those countries, you can access the phone. Now, their long-term goal is to have this technology company that they have created along with their phone to eventually be listed on the NASDAQ. As you know, crypto is becoming a big thing. So a lot of us know this is not new. This Cooper 3 phone is already making waves. It's a very high possibility that this project will get NASDAQ listed in the next few years to come. So let me leave you with this, right? Most people try to win in crypto by chasing the price. They wait for confirmation, they wait for headlines, and it's a little bit of a headache. It's like chasing the wind, right? They wait till everyone says it's green. You're going to go on CNN, Fox News, they hear all these KOLs saying all these great things, but we all know the real winners don't chase price. They find the projects before they get popular. They accumulate their positions and they understand that price moves last. Okay. So with all that being said and done, folks, while the crowd is watching the charts, smart money is quietly increasing quantity. You don't win by arriving late to momentum. You win by recognizing the shift before the crowd and positioning yourself while the price is boring. Very, very important to know this in crypto because in crypto, those who accumulate early don't need permission later. So, folks, the window is right open. I have provided you the link. I hope you guys get excited and also get some of these products as well. Thank you guys so much. This is another video coming in from Blockchain Wealth TV. We'll see you on the next episode where we provide more details on this topic. Thank you.